Welcome to our weekly Forex forecast, and this is for trading for the week of September 2nd to the 6th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. First, before we get into this, the big theme that's playing out in the market right now are the US-China trade talks and the tariffs that are supposed to go on as of the first week of September. So make sure to keep your eyes out on the news feed here, because if President Trump backs down from those, it will have a big impact on the market. So if the tariffs do come into play, it will have a negative impact on the equities, which means our yen crosses, Swiss franc crosses, all of these are likely to drop, and so are Australian dollar, New Zealand dollar as well. If the tariffs don't come into play, then the equity markets will go up, and so will Australian dollar, New Zealand dollar, Canadian dollar, these currencies as well. So it's important for us to keep an eye on what's going on from the tariffs perspective, because that will drive the market in the next couple of days here. So make sure you keep an eye on that. But other than that, starting off here, we do have Chinese manufacturing PMI numbers coming out on Sunday here. And these PMI numbers will have an impact on Australian dollar and New Zealand dollar, because both of those countries are trade partners with China. And if the Chinese numbers drop, then it has a negative impact on those currencies. And on Monday here, we have holiday in Canada and the US, but in the UK session here, we have PMI numbers out of Eurozone here. So these PMI numbers are very important because they're leading indicators to our retail sales and GDP numbers. So if these are below expectations, then the retail numbers come in below expectations as well. So if they don't match up here, we could see a negative impact on euro. And then later in the Asian session here, we have retail sales out of Australia, but also very important here, cash rate and the RBA rate statement. So at this point, we're not expecting an interest rate cut. However, the language that we see from RBA will be very important. If they are dovish and if they basically talk or express concerns about the economy or the US-China trade relations, all of that can have a negative impact on Australian dollar. On Tuesday here, we have more PMI numbers here, this time from Canada. It will have an impact on Canadian dollar, and from US here, which will have an impact on US dollar if they don't come as expected. And then we have GDP numbers out of Australia here. And going into Wednesday here, more PMI numbers out of the Eurozone. And then we get into the trade balance numbers for Canada in the US session. So Canada is interesting right now because Bank of Canada has not cut rate at this point. They have not even talked about cutting rates, whereas we have seen many other central banks openly talk about interest rate cuts or monetary policy easing. So any negative numbers or numbers that come in below expectations for Canada here could have a negative impact on Canadian dollar. And then we have inflation report hearings here for British pound here. So British pound is interesting as well because there's a lot of Brexit stuff going on, and they're trying to find a solution prior to the October deadline here. So we have seen the British pound being driven by the Brexit comments that are coming out or developments that are coming out. So keep an eye on this. If the inflation drops, then it puts that pressure on Bank of England to do something. So this is an important event here as well. Now, very important here, Bank of Canada rate statement. Like I mentioned, Bank of Canada, excuse me. Bank of Canada has not talked about cutting rates at this point. So we're not expecting any interest rate changes at this meeting. However, if the language here again suggests that they are open to doing something about it, they're open to making changes in the monetary policy, whether that's cutting rate or taking any other kind of action, that will have a negative impact on Canadian dollar, and we could see dollar CAD go up as a result. So keep an eye on those statements. On the other hand, though, if Bank of Canada says that the economy is doing really well and they're not concerned at this point, that could have a positive impact on Canadian dollar. On Thursday here, important day here, we have ADP non-farm employment change. These numbers are important because they actually are like the precursors to our non-farm payroll on Friday here. So these will have an impact on the US dollar. And then we have crude oil inventories, as well as Swiss National Bank Chairman Jordan speaking here. So leading into or going into Friday here, we have the big non-farm payroll numbers coming out. These are market moving numbers. So if we see that either the hourly earnings drop or the non-farm numbers are below expectations, then we are likely to see US dollar drop as a result. And we also have Canadian employment numbers coming out at the same time. So if you're trading dollar CAD, you need to be careful because it'll be impacted by both of these numbers. But any negative data or below expectations data that comes out for Canada, it just puts added pressure on Bank of Canada to do something about monetary policy. So these numbers, again, will be very important. And then we have Fed Chair Powell speaking. So Fed hasn't given into the demands from President Trump at this point to cut rates further, but they have said that they are monitoring the situation, and should the requirement be for them to cut rates, they're open to doing so. If he says the same thing and repeats that, then there will be no real change in the market. However, if he talks about cutting interest rates further or gives us some sort of a timeline for doing that, then we are likely to see US dollar drop as a result, and we are likely to see the equity markets go up. So these days, it's very important to pay attention to what's going on in the news. So let's move on to our charts now. We'll start off by taking a look at our euro dollar here. So we have seen that euro has finally dropped. We had talked about the support resistance level here last time, and now we have a big bearish engulfing candle here. So bias here is to the downside, and looking for price to pull back a bit, perhaps into 1.0550 level here. So looking for a bit of a pullback, or even into 1.1020 level. So those will be the two pullback levels I would keep in mind. But bias here is bearish, so looking for price to drop further. First target here would be 1.0850. And then below that, we are looking at 1.0720. Now that's quite a drop. So we may not quite get there. It's taken euro some time to get down here. This will also be impacted by what happens with the US-China trade relations, because this can turn around. So just be careful with this one. But for now, based on the technicals alone here, bias is to the downside. I'm looking for a bit of a pullback here and then a drop. First target is a 1.0850. Second target, 1.0720. So bias here is bearish for euro dollar. Pound dollar here, this one as well, we talked about how UK or British pound here was driven by Brexit negotiations at this point. As we get closer to the October deadline here, those things are likely to intensify here. The negotiations will intensify. The comments that come out of there will intensify, which means British pound can be quite volatile. So do keep that in mind. But we see that price had dropped. It's pulled back now, and we have a bearish candle close here. So I'm looking for price to drop. And then in terms of our targets here, we just need to zoom out a bit. So we haven't been at these levels in quite some time. So for the pound US dollar here, we're looking for price to drop. So next target here will be 1.2020. And then if price breaks below this, I'm looking for 1.1880. So 1880 as the second target. So bias here is bearish for pound dollar. Aussie dollar here, this has been interesting. We have seen price just trade sideways here for the last little bit. And right now for this week, we have a completely neutral candle close here. So bias for this week for Aussie dollar is neutral. And with this one, it'll be interesting because we'll have to see what happens with the trade negotiations. If the trade tariffs go as expected, as they have been proposed, then we're likely to see our Aussie dollar drop here, and we could see it go further. So in that case, the next target would be 0.6520. But again, we have to see how the news comes out and if there are any changes. And we have to wait for it to drop through the support first before we look for the move to the downside. For now, though, I'm just looking for price to go sideways until we see what happens with the tariffs or we get some other news related to that. For now, bias is neutral and looking for a sideways move. New Zealand dollar here, this one is bearish. We have seen price drop here. So bearish bias here. We could get a bit of a pullback here into 0.6350, but bias is bearish and looking for price to drop further. The next target here is 0.6220. Let me just get closer here. So the next target is 0.6240 and then 0.6180. So bias is bearish here for New Zealand dollar. Dollar CAD here, this has been interesting as well. We have seen it go sideways. Price did try to drop here, but then it got pulled back. Now we have a range bound move. So in this case, again, my bias is neutral and I will look for either a break through the high, in which case price can go into the next level at 1.3430, or if it breaks down through the bottom here, then I'm looking for a drop here back into 1.3140. So at this point, bias is neutral and looking for price to go sideways here. And when it breaks to either side, that's when I would be looking for the further direction in that move here. So neutral bias for dollar CAD as well. Euro pound here, this one we have seen it drop for the last 2-3 weeks here. So bias is still bearish. Now we are into support, so just keep that in mind. If price doesn't break through 0.9120, this one could go back up again. But for now, based on the candle close here, bias is bearish. So first we need to see a break through the support. And once that happens, looking for price to drop further into 0.8880 back into the support here. So bias here is to the downside for Euro pound as well. Euro Swiss franc, this has been trading in the range for the last 4 weeks here, hasn't really done a whole lot. And this week we have a neutral candle. We have bullishness in this candle, but also rejection, as we can see from the pin. So bias for Euro Swiss franc is neutral. And I am just looking for price to basically do more of this. And the reason for this neutral move is really markets just waiting for some stimulus here. And that stimulus likely is going to be the tariffs. If tariffs do come into play, we are likely to see a drop through here. And once we see the break of the support, so seeing a break of the support is very, very important. If the support doesn't break, then price could go higher here. But if we see the support break here, then I would, and only then would I look for price to drop further and move towards our first target of 1.0780, second target 1.0720. But for now, bias is neutral for Euro Swiss franc. Pound Swiss franc here, this has been pulling up though, but I'm not hugely bullish on this. This one I think could drop here as well, but a lot of this will be dictated by what happens with the tariffs again. So for now, this one is looking bullish, but it is into support resistance level here. So it could turn here, or it could make slightly higher high. So we have to keep that in mind, because this is an important support resistance level at 1.2240. If it goes up to there, then I'm looking for a move back from there. But where we are currently is also a support resistance level. So first here, if price does not break through, then I'm looking for price to drop back down. And first target would be 1.1920. And then 1.1720. So I will look for price to drop from here. However, if it breaks through the high here, then I'm looking for the move higher into the next support resistance level, and I would look for a reaction from there. So for now, though, this one, we just have to be careful. So I would say bullish bias here with next target of 1.2240. But if it doesn't break through the high, then I'm looking for a drop. Dollar Swiss franc, this has been very strong here. So for this one, bias is bullish, but with any of these any of these safe haven currencies, I would be careful, because the talk of tariffs is likely to get these to drop, because Swiss franc will go up and so will Japanese yen. So these crosses can drop if the tariffs do come into play. So just keep that in mind. So this one could change. But for now, we see that price has been trading in this a bit of a range here for some time here. So bias is bullish within this range. So we could see price go towards the high of the range. So that's what I'm looking for, a bit of a pullback and then a move higher into 0.9970. So bias is bullish for dollar Swiss franc. But if all the other Swiss franc crosses drop here, I would look for this one to drop as well. So bullish bias here. And now we are into our yen crosses. So here we saw that price has moved up a bit, but hasn't really done a whole lot here. So with this one is neutral for now, because this one could go in either direction. It hasn't really broken out of this range that it's been trading in for over the last couple of weeks. It's just going sideways here. And what I would look for here is to see if price breaks through the support. And if it does, then I would aim for the next bottom here, which is 126.60. So this is very important. If the price does not break through the support, I'm looking for price to go back into the range and potentially towards the top of the range here, where we could get a reaction. But like I said before, safe haven currencies, including Japanese yen, will be impacted by trade tariffs. So keep an eye on that. For now, bias is neutral. Only if it breaks through the support would I look for next level. And in that case, 126.60 and then 125 will be the next targets. Euro yen here, this one is looking bearish. We have a bearish pin bar here. So looking for price to drop further here. 115 will be the next target, which is the base of these candles here. So bias is bearish for euro yen. And in terms of a pullback, we could get a pullback back into 117.20. So bias here is bearish for euro yen. Dollar yen here, this one is looking range bound as well. It has been making lower highs, so it is moving lower, but bias here is bearish. So sorry, the trend here is to the downside here a little bit. Even though we have a bullish candle close, it has been making lower highs and lower lows here. So keep that in mind. But for now, we do have a bullish candle close. So this one could go towards the high of the range here, towards a 107, and then we could get this move back towards the bottom of the range here at 105. So right now, slightly bullish bias for dollar yen, but again, tariffs kick in, this is likely to drop as well. And in that case, I would target 105 first, and then we could see a move lower towards 104. Aussie yen here, this one has been interesting as well. We did see price drop here and then it pulled back. But overall, with this one here as well, we do have that trend a little bit to the downside here. We have seen price make lower highs and also lower lows here. So it has been dropping. So we could still get a pullback towards 72.80. But overall here, this one is not totally strong either. So we could see a drop from here. So for the Aussie yen here, we could see price move back towards the top of the range here into 73.00 and then a potential drop. But again, do pay attention to the tariff talks there. All right, next one, New Zealand yen here. This one, we see a neutral candle close here. Price did drop, but the candle close here is completely neutral. This one could move in either direction, so I would be open to the move in either direction for this. So bias is neutral. We could see price move towards 68 level here or drop back down. If it breaks the low, then I'm looking for price to move back towards 65.50. So for now, bias is neutral for New Zealand yen. CAD yen here, this one is looking bullish here. So again, we have been getting lower highs and lower lows in the yen crosses. And with all the tariff talks, the yen will play a very important role here. So if on Sunday we do see the announcement that tariffs are a go-ahead, then we could see markets gap. And that would be in the direction of the yen crosses. So yen crosses are likely to drop because Japanese yen is likely to go up if the tariffs do come into play, and the equity markets are likely to drop on the open as well. So that's something to keep in mind here. But overall, this one could pull back a little bit more into 80.20 or 80.50, and then we could see it drop. Especially if the tariffs come into play, then I'm looking for a drop here. And the target here would be 79 and then 78.50. All right, let's move on to our commodities now. Silver has been on a roll here. So very, very big move here in silver, all the way to 18.60 level here. And this is where we are into this important support resistance level. So to be careful. But this is also a safe haven asset and will be impacted by the tariffs. If the tariffs go ahead, this is likely to go higher as well. So bias here based on the big bullish move here, the bias is to the upside here, and I would look for price to move higher. So looking for a bit of a pullback potentially into 1820 level, and then a further move to the upside. First target is 18.60. Second target is 19. So bias here is bullish for silver. Gold here, gold looks weak at the moment, but this one can also change based on what we hear about tariffs. But just based on technicals here, this one is looking weak. So I would look for a bit of a pullback into 1530 and then looking for a drop towards 1492 level. So bias here is bearish for gold. Oil here, oil has been behaving the same way as we have seen yen crosses. We are getting lower highs, lower lows, but it's not really moving anywhere. So in this case, again, market seems to be waiting to see what happens in September with the US-China talks, the tariffs, and so on. So at this point, this looks more range-bound here. I will look for price to basically trade within this range of 53 to 57.50 level here and go back and forth unless we get a trigger that either breaks through the high or causes the price to break through the low. So if it breaks through the low, I will look for a retest of this previous level at 50.50. And if it breaks through the high, I'm looking for price to go into 59 and then potentially into 61 here. But for now, we are smack in the middle of that. So bias is neutral for oil. Copper here, copper has gone both ways. We did see a drop, but then price has pulled back here. We are into support resistance level here. So if price doesn't go through 2.5 level, 50 level, then this one could drop further here. So keep that in mind, that we are into resistance here. So the first thing will be, does it break through? If it doesn't, we're looking for a drop. Now, if it does break through, then I would look for price to go higher. And our next target would be 2.58. So this one could basically pull back higher into 2.58 level. So for now, bias is bullish, just with that caveat. Target would be 2.58. Bitcoin is looking sideways here still. It has moved lower here, and it's been trading in this range for quite some time. This is the daily chart, and we see price has just been shuttling back and forth here. It's into the support level here at 93.20. So we could get a move higher towards 98.80, but we don't know if it can sustain that. If it does break through 78.80, then we're looking for price to move higher into 10,820. But these are not the latest charts. They don't have the weekend price action. So make sure you look at that. But for now, this one is looking neutral as well. Again, range bound here. I'm expecting the range to continue here. Now, should it break through 93.20, then I'm looking for price to move lower into 88.50, and then we could see price go into this downward move here, and it could drop. But for now, it's just been holding sideways here. So for now, bias is neutral for Bitcoin. S&P 500, this one is very interesting and is likely to be volatile here. All the equity markets are likely to be volatile because we are waiting on the US-China developments. So with the tariffs going in, if they do go in as announced previously, markets are likely to drop. Markets have been expecting US and China to work out their differences or meet again and come to some sort of an agreement. And we saw that President Trump made comments that he had received calls from China, and then Chinese confirmed that they are working together again now. And as a result of that, we have seen equity markets go up. S&P 500 has gone up. But as we can see here, this is still trading in this range for last 4 weeks here. So it looks like market is just waiting to see what comes out here. So for now, bias is neutral on this. We do have a bullish candle close, but the problem here is if the tariffs do get announced, then we are looking for a drop. So for now, I'm going to be looking for a move in this range. But if it does break out, so let's say tariffs get pulled, then we're likely to see this go higher. And I would look for a move towards 30.20 in that case. But for now, though, I would be neutral, and I'm looking for price to stay within this range of 29.40 and 28.20. So bias here is neutral for now. But once we hear more about the tariffs, we're likely to see either a drop here if the tariffs come into play, or if they don't come into play, they get postponed, then I'm looking for a further move to the upside. But either way, we need to see a break of this range before we take any trades in that direction. So for now, bias is neutral. NASDAQ as well, as we can see, it's been trading in this range for the last 4 weeks here, hasn't really come out of it, just gone back and forth. So same thing here with the tariffs coming into play, then we're likely to see a drop, and I will look for price to move towards 73.70 or 7200. And if they don't come into play, then this one could go higher towards 80.20. But for now, bias is neutral, and we'll just have to wait and see how this plays out. But it is trading in the range, and that's what we would look for. DAX here, this one has moved up. So bias here is more bullish, but we are into support resistance here as well. So do keep that in mind here. But bias is bullish, and we could see price go higher towards 12,200. So bullish bias for DAX. FTSE here, this one has moved up here as well, but it's still in this range as well. So for this one, it's slightly bullish. So looking towards 73.20 level here, but just be mindful of the tariff situation because it will impact all the equity markets here. But for now, this is slightly bullish, and we could see price go towards 73.20. Nikkei here, Nikkei has also been trading in a range. So this one is neutral for now. And once we hear more, the next target here would be all the way up into 21,800. Or if we see equities drop, then we are looking at 19,280. So for now, bias is neutral for our Japanese, or Nikkei, I should say. So that's it for today. Have a great trading week, and I'll see you next time. Bye for now.